Hi, welcome to today's video and thanks for joining me. Today we're going to be looking at this topic, 3 of the biggest financial planning problems or retirement problems. Now, I've been doing this for 22 years, helping Canadians retire successfully, both business owners, individuals, and families right across Canada. And these happen to be the 3 biggest challenges that you're facing today. Now, I hope these aren't the things that you're challenged with, but I have a funny feeling that they are. So pay attention because you're going to love this video and it's going to help you to figure out what you do about these 3 biggest things. And of course, I'm going to start off right away by telling you got to get a financial plan done. It's seeing the outcome of your planning decisions before you commit to them. If you've been a fan of my channel, you see me talking about this all the time, is I'm a big believer in getting a plan done. So I won't take up more of your time, but that's actually how you fix the 3 biggest problems. Okay, let's get into the first one. This is probably the biggest one of all. I see it in seminars when I did seminars for the CJA Association of Ontario and CPAs. I would ask, what's your biggest planning decision? What is your biggest fear? What's your biggest financial fear? And the biggest one is, do we have enough money to retire? Or do I have enough money to retire? Or will my money last for retirement? You could just cycle it in a different way. It's the same question. So let's talk about that. When you are thinking about your money, this is what you're really thinking about, that you have enough money to get to a certain point, and then you really can't see beyond that. You feel like your money's not going to last throughout your entire retirement. And that is the biggest anxiety and worry of many people going into retirement is, just don't know if we have enough. And the way that you figure that out is you talk to an advisor, get a plan done. But if not, just answer these questions if you can, as well as you can. In some of my other videos, I gave you some online tools of how to get to that answer. But the best way is to talk to an advisor. So the first one is you got to know how much you're going to spend. I always say, what's your spend? Companies call it burn rate. How fast are you going through cash? So you got to nail that number down. What is the amount of money that you are going to go through every month or year? Figure that out and just get a piece of paper, and actually probably an Excel spreadsheet is better because it'll add up everything for you, but it can be napkin math if you need. Just try to get a good number of what you mean by that. How old will you live? You need to know how long your money's got to last, right? So you look at your parents, look at your grandparents, then consider what your own health is like. Sometimes your health is better than what your parents or grandparents was. So you just think about how long, how many years is that going to last? Is it 25? Is it 20? Is it 35? Figure out what's the longevity here of your life. Then you look at your retirement accounts. How much have you saved? What do you actually have put aside for that time when you're going to retire? How much money is there? And so that's where you start to say, well, I don't know if that's enough money, right? So this is how you get into that. Answering the next question. Asset allocation. Many times I'll see someone's retirement accounts and they're just not invested properly. You need to have some equities in your investment portfolio in order for it to last through your lifetime. The thing that's drawing back on that, we call it the tax grind. It's how much tax you're going to be paying, which is one of the things that I talk about. And then also inflation, right? If you're not putting equities into your portfolio, a small amount, you're just not going to be able to have sustainable amount of growth in your portfolio to last throughout your lifetime. So you need to rethink how your portfolio is invested. I've said in other videos about asset allocation, what's your geography, what kind of equities. Think about that very clearly about what might be the best for you. Income sources. Where are you getting the money from? Is the money coming from just from an RSP account, or do you have an RSP, TFSA, non-registered account? Do you have a corporate account? Do you have rental income? Canada Pension Plan, old age security. Is there going to be a clawback in your old age security? You got to know what are your income sources. And then what is the impact of inflation? Certainly we know that with some of the seniors who retired since 2020 to now, inflation was a big problem for them because food costs went up, gas costs went up, travel costs went up. It was very, very difficult for them to absorb that kind of increase. So if you're thinking that inflation is not going to be a problem, ask some of the seniors who are retired how hard that has been for them. Okay, the second one is not having a withdrawal strategy. I've said it in other videos, most people have a contribution strategy and they haven't developed a withdrawal strategy. When you go to an advisor, I don't care where it is, if it's at a bank or wherever, and they give you a number, and that number is based off of a time value of money. Put in so much money over a certain period of time at a certain rate of return will get you this number. That is not a withdrawal strategy. That's a contribution strategy. It's the other side of the equation is how much money do you take out monthly or annually, out of which accounts for how long and at what rate of return and what's inflation going. That is more of a withdrawal strategy. So it's like sort of the reverse of the income or the contribution strategy. You need to develop this. And part of the problem of developing a withdrawal strategy is there's a lot of balls in the air, right? You got Canada Pension Plan and Old Age Security. Do you defer or not? You may or may not have a pension plan, and then you're trying to think, well, is that going to be a clawback into my old age security? If you're not married and you can't do any income splitting with somebody, that is a big problem because it's likely you'll have a clawback on old age security. Then you have RSP, TFSA, non-registered, and corporate account if you're a business owner to mix into that. And then you have taxes and inflation. So these are a lot of balls to have up in the air and trying to figure out a withdrawal strategy. That's why I say a financial plan is so important. You're also going to want to look at when do you take CPP? What's the break-even point for you? On so many of the videos, you guys talk about take it as early as you can. And some people say, no, defer to age 70. I'll leave that for you to talk about. But you want to know what does it really mean for you? Not what it means for other people, but when do you take CPP? What's the optimal age for you? You might be going through an RSP meltdown where we're taking money out of your RSP and putting it to TFSA into a non-registered account so that you're not going to leave that RSP behind for Canada Revenue to tax it. And speaking of taxes, the third biggest problem that you're facing, at least that's what I see most often that comes across my table, is you have a tax problem. So it's the people that come in that have a tax problem, they don't have this question in their mind that says, I don't know if I have enough money for retirement. They know they've got enough money for retirement. What they're doing is they're just being choked with so much taxation. They say, is there a way for you to lower the amount of taxation that we're experiencing? And that's what we're going to be looking at. And so one of the videos I talked about how this couple came in and they were going to spend about $1 million in taxes over their lifetime today until they pass away. And I say, okay, let's get a financial plan done. We end up saving them about $200,000, as you can see there, on their year-over-year taxes until they passed away. And then the result of that actually was their estate saving, instead of paying $820,000 Canada Revenue, they paid $146,000. So I don't know about you, but I really like it when I get some news delivered, say, you're going to spend $200,000 less being taxed throughout your retirement, and then you're actually going to pass on close to $700,000 more to your beneficiaries as a result of that planning decision. It's a powerful thing to go through. I would really encourage you to go through that exercise with an advisor. Okay, we're at the end of the video and I have a question for you. What is your biggest financial planning concern? I'd like to know that. Other people want to know that. It's really very helpful when you put your comments because people actually read them and say, that's exactly what I was thinking too. So I want to know, what's your biggest financial planning concern? Put it below. Remember to like and share this video. And remember, we take care of your wealth management so you can take care of what's most important to you. Really enjoy giving you this material. And again, like and share it with anybody that needs to see this. And I look forward to seeing you in the next video. Thanks and take care. Bye-bye.